This is the Ellis Martin Report and Money Talk Radio. Join me now for a conversation with Victor Cantore, President and CEO of Amex Exploration, trading under the symbol AMX on the TSX Venture Exchange, and in the U.S. on the OTCQX as AMXEF. The company's flagship Perron Gold Project in Quebec's Abitibi region is 100% owned. Perron continues generating strong results across multiple high-priority zones. Explore all the project details at AMXExploration.com. Let's get right into it with Victor. Victor, welcome to the program. It's great to visit with you today.
Thanks for having me on. It's always a pleasure with you.
You know, you're one of the few companies in the space over the last couple of years that has done extremely well. How do you account for that?
We stayed humble and we moved along. We just put out a spectacular PA. And the PA that we put out is actually, we've done it in a staged approach where you actually dramatically lower the technical risk and dramatically lower all the financial risk, because a lot of the upfront money that you would normally need for a big project is not there. It's a lot lower for us. We're kind of fortunate where we're located also. We're right in the middle of the Abitibi Greenstone belt. It's been really prolific for gold mining. But not only that, is where are you located in the Abitibi Greenstone belt? We're right beside a town. It's an old mining town, about 800 residents, 23 kilometers south of us. You're looking at a town with about 12,000 residents. They currently provide most of the workers for Casa Berardi. You know, you have roads right to the project, you have electricity, you have infrastructure, and most of all, you have a workforce. So it's been really great. And we've just posted out a new preliminary economic assessment last week.
Give us an overview of the Perron Gold Project in Abitibi in Quebec, Canada. Let our audience know exactly what it is and why it has such potential.
Absolutely. What's important to know is not all ounces are made the same. Our project has 2.3 million ounces, and 1.6 million of that is in measured and indicated, around 6.14 grams per ton. But the star of that is within that you have what we call the Champagne zone. There's a total of 831,000 ounces in measured and indicated at 16.2 grams per ton. That's over a half an ounce per ton. And there's also another 128,000 ounces. So it's pretty close to a million ounces. The other ounces in inferred are a little over 9 grams per ton. Where it's located, it's quite a high grade project. Like I said, not all ounces are made the same. And there's enough ounces here, enough grade where we're located to put this into production. And that's why we put out a PA, is that we have an approach on how we're going to put this into production.
Are you going to put it into production, or are you looking to get taken out at some point? I imagine all options are open, but are you a mine builder? Do you have mine builders aboard?
We've been bringing on staff for mine building. We're definitely going to proceed forward to building it. If someone comes along and realizes that this is such a great potential and they want to buy it, at the end of the day, we're going to do what's best for all our shareholders. We do have a shareholder called Eldorado Gold, which he just increased his position. He's at 17%. We just completed a $37.25 million financing, and they were 64% of that financing. We also have Eric Sprott, that's a little over 10%. So yes, we're going to proceed forward with building it. And like I said, if somebody comes along, tries to buy it, then whatever's best for the shareholders, really.
So that could be Eldorado Gold, right?
Could be Eldorado Gold, could be anybody. I mean, they're already at the starting gate. They're at 17%. So that could be them the way it could be anybody else.
You've got this project priced out at about $2,500 per ounce, when today the price of gold is about $3,650 US.
That's correct.
Why this big leeway?
We wanted to be conservative. I mean, we wanted to show people that even at $2,500 gold, this project makes a lot of money, very profitable. Our post-tax NPV is $1,085,000,000 US. Our post-tax IRR, this is all at $2,500 gold, 70.1%. Our payback period is 1.4. Now, actually, if I do it at 30, we did a sensitivity analysis and we put it on our site. It's in our PowerPoint. If you use 3,400 spot, which is still another $250 below where spot is today, the payback period is 0.2. That's like 2.5, 3 months. And even if I go post-tax, it's 0.4. A ratio that's really good to look at also is your post-tax NPV over your CapEx. Usually 2 is good and 4 is spectacular. At a base case of $2,500 gold, we're at 7 times. At spot, at $3,400, we're at 13 times. That just shows you what a fantastic project this is. I mean, we look at our pre-tax total free cash flow at spot, $3,400, it's $5 billion. It's $5 billion. Would it be? The IRR is 107% after tax. I'm really proud of the team and everybody that we came up with these kind of numbers now. That's why we're just going to continue moving forward.
You've curated this carefully over the last few years. We covered this company about 3 years ago, I think. Nice work. What's the plan for the next 6 months?
A lot is happening. We have our Gantt chart, which shows our development for the project. We're looking to start with a bulk sample. We'll build a production size decline, ramp, portal. We're starting a feasibility study for just a toll milling part. We're going to be doing this in phases. We're expecting it to be in full-blown production starting in 2028 with 1,000 tons per day in the first 4 years. You got a production profile the first 4 years of 102,000 ounces per year. Our first 10 years, you're looking at 112,000 ounces per year. First 4 years of toll milling, you're looking at around 1165, 1,165, while gold is sitting right now at 3,600. So it makes it very profitable. That's why we're trying to move as fast as possible. And the staged approach is actually for permitting purposes that we can actually get into production by 2028. That's where we're targeting right now. First 4 years of toll milling, and after that, continue with a second feasibility study and have our own mill on site. So like I said, the first 10 years of production, you're looking at a profile of 112,000 ounces per year. These are very, very profitable ounces. These are high-grade ounces. When you look at the average grade, it's very high. We're very fortunate that we were able to bump into a deposit of this grade.
And as of this broadcast, you're trading at about 260 Canadian and 190 US. That's a real sweet spot for a lot of investors who like a company that's mitigated a lot of the risk and is trading above $1. You're trading above $2 Canadian and almost $2 US.
That's correct. We have mitigated a lot of the risk. So going forward, we're going to continue de-risking the project, and we're de-risking it by putting in a feasibility study, getting all the authorizations, and starting our DSO operation, starting the second feasibility study. Just going to continue moving it forward, advancing it, and de-risking it along the way. And when you look at a project like this, trading at $300 and some odd million of market cap, when you look at the post NPV at well above $1 billion, there's still a lot of room to grow here.
Well, Victor, it's been great catching up with you. Keep us posted, and congratulations on all your good work and this nice PEA.
Thank you, Ellis.
I've been speaking with Victor Cantore, President and CEO of Amex Exploration, trading on the TSX Venture Exchange under the symbol AMX, and in the U.S. on the OTCQX as AMXEF. Go to their website, amexexploration.com. For Money Talk Radio and the Ellis Martin Report, I'm Ellis Martin.